Today we have a special guest, Mr. Femi Adeyemo, who will be speaking to us on the topic, leveraging private capital to accelerate commercialization in emerging markets. Mr. Femi Adeyemo is the founder and chief executive officer of Hanergy, a Bill Gates affiliated venture-backed distributed utility that provides energy reliability to residential, commercial, and industrial customers in Nigeria. Femi led Hanergy to complete a $9 million equity capital injection from fourth-tier One Global investors. Beforehand, Femi executed nationwide rollout of 4 mobile telecommunication access networks. It was a single point of contacts on rollout and managed service operation projects to multinational telecom, which include Ericsson, Hawaii, and Nokia across Africa, South Africa, and Asia, from startup phase to nationwide scale. With 15 years of versatile experience, Femi is particularly skilled at operation excellence, deploying high availability and reliability for operations ranging from solar energy to telecommunication. His work has been featured on CNN, BBC, Reuters, Bloomberg New Energy Finance, CNBC, CGTN, Quartz, Yahoo Finance, Channels TV, NTA, and several other international and local press. Femi has an MSc from KTH, Stockholm, Sweden. Again, I say it is my pleasure to now invite Mr. Femi Adeyemo to educate us in the next 1 hour about the topic, leveraging private capital to accelerate commercialization in emerging markets. Mr. Femi, you are welcome on board.
Thank you, Mr. Olatunde. Good afternoon, ladies and gentlemen. It's a pleasure to be in the position to be able to speak to you all this afternoon. I will try as much as possible to make these interactive. And please, if you do have questions, I believe that Mr. Moderator will be able to help with questions, because I think that I want as many people as possible to be able to pick a few things out of the session that we will have today. I will start by asking, I can use the raise or hand raise feature. Is there anyone that is already an entrepreneur that has private capital, either it is venture capital or private equity? You have a business and you already have been able to raise capital from non-conventional sources. And I'm talking of either it is angel investment, private equity, or venture capital. Please, can you raise your hand? I want to know my audience as much as possible. Okay, so I see one person. That's good. Okay, thank you, Sophia. Any other person? Okay, so we have one person. Okay, all right. Are there other people that? Okay, so 2. Okay, are there other people that have businesses, but it? I mean, you self-fund your business today? So the admin note, you can put your hand down. Are there other people that run their businesses today and would like to be able to scale the business by bringing in private capital, either it is angel investment, private equity, venture capital? Okay, I see 2, 3, 4, 6. Okay, all right. Okay, very good. All right, so so this morning I will I mean, my hope is that, I mean, few years down the line, I can get a message on LinkedIn to say, hey, Mr. Femi or Femi, I attended XYZ, leveraging capital, leveraging private capital in 2022 that Room Business could organize, and that was eventful, and it's up for where I am today. So that is my expectation of looking back and saying that this was a successful 1 hour spent. All right, so I think it's important to state at the beginning that it is not raising private capital. Number one, is not for everybody. And it depends on what you want to achieve. If you have a business today, where do you see that business? Are you happy for that business to be Femi Adeyemo and Sons? And then it can continue to be a family business. And there is nothing wrong in that. Right? I mean, we have businesses in Nigeria, outside Nigeria. There are several businesses in the US that are family-owned businesses, and that they never plan to even maybe take it to being a public company that in New York Stock Exchange or NASDAQ. So there is nothing wrong in that. However, there are several reasons why you might want to go the route of private capital for you to be able to scale or sustain the business. And some of those could be the scale of what you want to achieve. For instance, I will use the fintech space as an example. With what is happening in fintech today, that space or that sector is one that you can be a fintech and just run it as a mom and pop. You're not going to scale. Competition will crush you and send you down the grave, because you're not going to be able to hire talent, because you're going to be going to the same pool to hire talent. So, I mean, maybe 1% it might be possible. I mean, I shouldn't say 100% it's not possible for you to run a fintech and bootstrap it, especially in Nigeria that we have today. But I can tell you that 99% of the time, given what is happening, talent that you will need to be able to write software and do all of the work that is required, you're probably not going to be able to afford them, especially if it's not a case of you having a godfather, or you, maybe your parents, they don't own maybe some streets in Banana Island, and they were able to write you maybe 1 billion naira. I don't know if 1 billion naira will even be enough. So I'm saying that to establish that indeed it's not a must that everyone must raise private capital to be able to scale. However, depending on what you want to achieve, depending on your why of setting up that business, it might be critical that you raise private capital. And I'll give myself or the company that I founded and still the CEO, Energy. I mean, the company was incorporated in 2013 August, and until late 2018, about 5 years after, before we raised private capital. However, we're able to get grants and debt, and I will get into how you can look to the different capital structure and the different capital injection that is possible. Another question. For people that run business today, are there people that, again, would like private capital injection and are still at maybe less than 10 employees? So your team today, you're less than 10 employees and you would like to raise capital. Please signify by raising your hand. 1, 2, 3, 4, 5. Okay. All right. So it's important that I mention grants. So I've been a beneficiary of grants, and I know what grants can do. And that's the first stage the first stage of capital raising that I always talk to entrepreneurs or my mentees about, especially if the line of their business align with the SDG goals, Sustainable Development Goals. Because with that, if what you're doing aligns with SDG, the chance is very high that you might find grants here and there to be able to at least kickstart what you're doing. Why did I say this? I have a mentor of mine, or a mentee of mine rather, who they won 5 million naira grants sometime last year from Lagos State government. And then after that, they approached me. I mean, they brought their whole team and they mentioned that, hey, we want to raise Series A. And I'm like, okay, hold on. Guys, let's schedule a meeting. So we're on a call and they were telling me how they want to raise Series A, how they attended this webinar and that webinar. And I asked them, what is your revenue? Tell me your business model. And everything is still all over the place. And I told them, guys, you are not ready for Series A. So there is also what we call, what is Series A? I mean, we will get there. So maybe I should quickly just take that. When you're starting a business, you have maybe still between 5 to 10 employees, maybe revenue is on today, off tomorrow. At that point, you don't want to unduly expose yourself, especially if you're not an high-tech growing company or high-tech company. You don't want to unduly expose yourself to private capital because there will be a lot of dilution at the initial stage. So especially if your business can be themed along the path of the SDG, my recommendation is grants. There are several grant providers from DFID, USAID, USAID, NORAD, even locally in Lagos, the Lagos State government. I mean, I'm not a government person, quote and unquote, but I've seen grants, checks that have been written by the Lagos State under the innovation scheme and also the LSCTF. So that's a good place to start. So first of all, prove that what you're trying to do is sustainable and at least you can have a customer. I'll quickly move away from grants. So that's the first. But if your business doesn't align with SDG goal, and like I mentioned before, fintech is one that private capital or angel investor might be able to, from the get-go, if they like the idea, write you a check. I mean, it has happened in Nigeria before with, some of the leading fintech companies where when it was still like the idea without any customers, they were able to raise some sorts of capital from angel investors. And angel investors that are more or less individual investors, maybe they've had successes from previous ventures that they've run and they've been able to have some exit. They have some money in the bank that they've dedicated for investments. You can approach them. There are a few of such community now. There's the Lagos Angel Network and a few other ones are popping up. So that's that on the early stages. So let's move very quickly to say you've passed the level of angel investments, right? The next stage will be seed investment. And my advice again, and I'd say this to all of my mentees, entrepreneurship is very interesting. It could be very lonely. And if you're not intentional about what you want to build, you will see that entrepreneurs, most often than not, they just maybe a seconds away from scandal, and it's across the world. So also as an entrepreneur, you want to keep your head down as much as possible, which again is one of my mantra, one of my watchword, and I try to coach my mentee when I have opportunity to speak to them. So again, after either it is a grant path, SDG themed business, or an high-tech that maybe grants, if grants is not the case because you're an high-tech, maybe it's a fintech, let's use fintech for instance. Of course, there are accelerators. I believe some of you will know about 500 startups. Some of you will have, I expect a lot of you to have heard of Y Combinator. So that's a part for high growth companies that are not in the line of SDG. Again, with an idea, it's not impossible to have a Y Combinator say, okay, we like the team, we like the business case, we think that you can make it happen. So signing up or getting into an accelerator is a path for high growth company. And it's interesting that Techstar is also one. Techstar, I believe the headquarters is in Canada. Recently, Techstar had partnered with ARM, right? I mean, the finance house in Lagos. So, and they're having Techstar, I think, Techstar Lagos are the first set of cohorts. I believe the application is still on. That's one that you can also apply to, because you can get into that network and then more or less be on the ladder to scaling. So after all of that, the next stage will then be what we call venture capitalist. And that's where conversation around Series A will start. It's important, again, that because they're talking about commercialization in emerging markets, of course, they say charity begin at home. Some of my advice is that given that the whole world now is a global village, as much as possible, if you can, and it's not a must, it's not everything that this can happen. Plan your business to be as scalable as possible. Because with that will excite investors, that will excite private investors, and that can also de-risk your business for them. Because if you are, for instance, if there is, maybe an issue in one market, let's say Nigeria, for instance, and you can do something in Ghana, while inflation is high in Nigeria, or there is, God forbid, insurgents is affecting, significant part of your target markets, you can more or less diversify, So private capital in a lot of instances, we've seen, if you look at top companies in the world, you will see that most of them, they leverage private capital to be able to get to where they are today. Even locally, if you look inward, the biggest businesses in Nigerian stock exchange today, your MTN, your even Dangote. Dangote at some point had to go to the public market and New York Stock Exchange, Nigerian Stock Exchange to raise capital. MTN, not until recently, we're not raising capital in locally in Nigeria, but they've always been raising capital from private investors and then public in South Africa. So I will spend a few time about venture capitalists, because it's when you get to the Series A stage, and then maybe after that B. So Series A is COVID disrupted a lot of things. Until COVID, it's not common to see a Series A of $25 million. Most times Series A maybe cap of like 15, maybe maximum of 20. But during COVID, we saw maybe even Series A of $30 million above. And then Series B, that's normally like 40, 50. During COVID, we saw $100 million of Series B, So how can you leverage private capital or private venture capitalists to be able to scale or commercialize at scale your ideas? Some of that is not going to happen, or else you do a few things. And we call it being investors ready, and how can you be investors ready? You are not going to be able to leverage private capital if you run your business as a one-man show. What do I mean by that? If you run your business and you want to do anything, you're just dipping your hand into the business. You don't have a structure whereby on a monthly basis, maybe, if the business is at stage where you can take salary, you take salary and that's it. Not that you want to do everything from grocery and all of that. It is the company account that you're dipping your hand into every time. That is not where you want to be. You want to ensure that there is structure in place and you are investment ready. And I'm going to mention a few things that can get you to being investment ready. Your financials. Your financials has to be very, very top notch. From you having what we call management accounts on a monthly basis, in a drive that whenever a potential venture capitalist, they're going to do it. I mean, what is called due diligence on you. The expectation is that by the time you're getting ready for a venture capitalist, you have what we call a deal room or a virtual data room where all of your historical data, historical reports, you can send it to them on a link and they can have access, very well arranged. So I've mentioned financials. So financials, you need to get your financials in order. Audited accounts, it's very important. So financial, and I'm separating the two so that you know that yes, you need to get your monthly accounts, but it's beyond that. When you get your monthly account, you also need to be able to get your audited financials in place. So 2008 was when we have, I mean, by December of 2008 was when it was clear to us that we're going to complete our Series A, because by then we had already have Breakthrough Energy Ventures, who is, I mean, the climate fund that Bill Gates put together, had already indicated interest that they will invest in our company. Of course, I mean, you can imagine at that level, if we were not ready, if our financials are all over the place, do you think that a fund put together by Bill Gates that had never had any investment in Africa before will come to Nigeria and find a company funded by one guy from Osun State, and they will say, okay, we are going to back you as the first investment outside of North America. So it's critical that you know what it means to be investment ready. So financials, I've talked about financials, audited accounts. And I will also say something on the audited accounts. Again, it was clear the path that we wanted to take. There was no ambiguity in it at all. So about 2 years, so by the time that we're having our 2017 audited accounts, we switched. We've had auditors from 2014. We switched our auditors to KPMG because we know that we want to play on a global scale. And if we're going to play on a global scale, I mean, no disrespect to auditors that do not work with Big Four, but we wanted to de-risk the investment for our prospective investors. And I ensured that we got, I mean, someone in from KPMG, and I can hear some of you already saying, KPMG, they will charge you very high amount and all of that. Not every time, especially if you're able to build relationship. And one of the things that we'll also say is you have to build relationship. I get tons of requests, hundreds of requests on a monthly basis. Attend this event, attend that event. As you're also building relationship, you have to be able to separate noise from, I mean, the accountants call it substance over form. You need to be able to know that, hey, I mean, this is something, what am I getting? What's the need for me? So if I'm attending an event, what's in it for me? Of course, I mean, with where I am now, I still have a long way to go. But for now, it's not everything what's in it for me. At times it's given back, which is, I mean, what I'm spending the 1 hour of my time today on. So again, we're able to bring in KPMG at a very, very, very discounted rate because we're able to sell the dream to them and to say, you know what, even though we don't have money today, we are sure that we're playing a global game. And if you get in early, you are putting yourself in a fantastic position that will mean that the door is shut to the remaining 3 Big Four. This was in 2016 conversation. This is 2022, 6 years after. Ladies and gentlemen, KPMG is still the only one that have an account, and I don't think that's going to change anytime soon. The next one, get good lawyers. Similar to, I mean, our Big Four auditors, I was able to land one of the best top 3 law firm in Nigeria, introduced by a mentor of mine. When I met with the top law firm We had conversations, and I'm like, guys, I don't have money. But I am sure that if you give me 9 months, we're going to go on a journey together. And after that journey, I can guarantee you that we will not have anything less than $10 million after that 9 months. Interesting thing is the lawyers. In fact, the first meeting that they attended with me was a deal that we walked away from, $1 million, because the terms did not really align with our sustainability plan. So imagine a lawyer that I've just hired, free or on the back of, in 9 months, I'm going to be able to do X, Y, Z. And then the first meeting went together, and we walked away from a deal that would have at least given them line of sight to being able to be able to get their fees. But they understand, because the vision was clear. So they understand and they accepted that, okay, that's fine. So financials, like I said, get good lawyers, because again, venture capitalists, private equity folks, a lot of them are entrepreneurial driven, they like your face and all of that, but it's not every time. So you also want to be sure that as much as possible, you have your back covered. Okay, so all that being said, you are going to be in a good position if you already have an idea. And this is not an ideation or idea generation session. It's likely about private capital. So after, all of that is said and done, where do you meet these people? Because I have had several instances where people would tell me, oh, Femi, you're able to bring in Norfund as an equity investor. You're able to bring the European Union. You're able to bring the Bill Gates Fund, all on shell. How did you do it? Of course, okay, I hope I am audible.
Yes, sir, you're audible.
Okay. All right, so where do you meet these people? Again, I've said that events, but you have to be selective of events that you attend. For some events, you might even be in a position to be able to get the attendee list. Get there. If you have the attendee list, or at times too, some of the private equity, or in fact, I will even say start with venture capital, because private equity, most of the private equity firm want you to have been profitable already before they write check. So after the seed stage, your Series A is likely going to be supported by venture capitalists. As a matter of fact, for our Series A, when we had a lead investor sent us term sheets, and term sheet is likely a simple document. It could be 3 pages, 4 pages. It's more or less like a letter of intent that is non-binding, that an investor can send to you to say, okay, we have had conversation, we've done due diligence, and we are now happy to proceed to make an investment. So that's term sheet. So after we had lead investor write us the term sheet, we raised $9 million in equity. So the lead investor did $3 million. So we then had a private equity firm that we've been discussing with, that we thought, okay, maybe because we already have a venture capitalist, if they can join the same term sheet, because the term sheet or a letter of intent from a private equity investor will be different from a venture capitalist. The private equity investors want to exit in 5 years. Either you are successful or not. By 5 years, they're going to ring a bell on the business in the sense that they want to sell it, because based on their mandates, most of them should not stay more than 5 years in any investment. So private equity, most times, because of their mandate, they want to wait till you are profitable, and they can build their model to see that where you will be in 5 years, if you will be profitable, if the business will be in a position to be able to sell the business, and then you can move on to other things. And for some of you, I believe that there are a lot of entrepreneurs. Maybe you might be wondering, selling the business, why? Again, if you are looking at a lot of the entrepreneurs globally, you will see that some of the big business leaders today had maybe one or two other companies that they've run. Maybe they exited, maybe they sold some of those, take proceed from there and go do other things. A lot of that is still lacking in our ecosystem. And we need to see that for us to be able to play at the high level that the advanced countries are playing at. So back to the private equity. So at that point, and we got another check, which was a $5 million check from a private equity firm. At that point, looking at the term sheet, it was clear to me that we were not ready to play with them because it was shaky, and I know of, a few private equity deals that are in court today because maybe the term sheets, maybe the companies took the money from private equities earlier than they were ready for. So that's why I said you take it step by step. If you are a high growth tech company, go through the accelerator part, get angel seed investors and start with that, and then you take it on to your series A. And preferably venture capitalists should be the investors that you will look at for your series A. If you're an SDG themed business, or you're doing something with water, something with electricity or recycling, all of those are SDG themed. Go look at the SDG goals. I believe there's 17. You're doing something in healthcare, that's also an SDG themed business. So indeed, that is what I will say. And of course, by the time you are now, maybe you're already at the stage where you're having maybe up to $5 million, 2 billion naira, that's it, right? And you have line of sight to being EBITDA positive, or even having running a profitable company. If you still think that you need to raise another round of capital to take you to the next stage of growth, you can think of Series B. At the Series B stage, depending on where you are, that might be the time where you are looking at private equity, either at the B or the C level. And again, like I've said, I know Nigeria is a very, very big market. My organization, we're still largely in Nigeria today. We're in a few other countries, but that's us piggybacking on some of our clients that have operation in other countries. And of course, post Series B, if you are profitable, of course, there is nothing bad in thinking of even then taking the company public. But we're discussing private today. And I think I would like to, I don't know if we have questions already, moderator.
Hello, sir.
Yeah,
Yes.
Mr. Moderator, I said, yeah, I don't know if we have questions already.
Somebody's raising his hand.
All right.
Hello, Mr. Hello, Yangate. Hello.
Yes, I'm here.
Do you have a question?
Yes.
Okay, you can speak on.
All right, thank you very much. Thanks for your presentation. I crave your indulgence. You keep making reference to Series A, and I think at some point you mentioned Series B. I don't know what categorization that refers to. It's not something I'm familiar with at all. I don't know.
You start making the updates for that. What do you call it? For the Vorpecula, so these customers can get in. Thank you. Because this man doesn't have.
That's not me. That's someone else, please. I hope you heard. Did you hear me?
Who is giving us the background noise, please?
Okay.
Ian,
okay. You got my question, right?
Yeah. I heard your question, Ian.
All right. Okay. Thank you.
All right. So very quickly, I think I hinted on the ban before, but I did mention that COVID had disrupted the capital raise band for Series A or Series B. But I will say that largely you can see Series A as you raising private capital of anything $1 million and above. So if you are raising between 1 million to say 10 million, you can consider that as a Series A. If you are doing anything less than 10 million, let's say between 500 to a million, you can categorize that as seed investment. Maybe from 250,000 to 1 million, you can categorize that as seed investments. I did talk about angel investments. Angel investments are mostly individuals that can write to $20,000 check, $50,000 check, maybe 100. But when you're getting to $1 million range, largely you're already talking about Series B. And if you're talking about double figures, again, COVID disrupted a few things. Series B normally will be between your 11 million to say 50 million, even less than 50 million. But during COVID, we saw companies raising $100 million in Series B, and like Series C, maybe $250 million. I hope that answers your question, Ian.
Hello, Mr. Yang. Hello. Hello.
Okay, I was muted, so I was not able to unmute. Now I'm able to unmute. I think it got pretty fast. I mean, the way you pointed it out. So at some point you mentioned 11 million. So I was wondering, is it 11 million naira or $11 million? So I didn't really get it.
I'm talking about dollars. So because I don't know what exchange rate to use. So that's why I prefer to stay with million. I don't know if I should use the official rate of the 430 million or 430 naira per dollar, or if I should use the black market of 700. So all the figures I'm mentioning, they are all in dollars. So I said for the initial stages of the seed investment, angel investment, which is the first stage, by the time you want to raise capital, especially if you want to build an high growth company, your first port of call ordinarily should be angel investments. Angel investments can write to, and those are likely individuals that they've made some money either from working as a professionals or from running businesses before, and maybe they sold the business, they have some money that they have earmarked to invest. We have some entrepreneurs in Nigeria already that are already angel investors that are writing checks or that are investing in other companies. So that's angel investment. And I said that could be from as low as $10,000 to maybe 50, maybe even 100,000. And then the next level after the after the angel is the seed investment. Seed investment can be up to hundreds of thousands of dollars. And the next stage, largely after that, is Series A. So Series A is from $1 million, like I said, to $10 million. It is not, in recent time, you can see a Series A of $20 million. But I'm saying pre-COVID, most times you will see that Series A is largely single-digit capital raise, single digit in million. And then, but like I said, in recent time, we've seen that even that had increased. So Series B likely used to be double figure from, let's say, 11 million, 15 million to anything less than 50. That's what we used to see as Series B. But during COVID, a lot of things were disrupted. And we saw a few Series B capital raise that was up to $100 million. So Inyang, I wasn't talking about Naira, and I hope that answers your question now. Adekola asked a question on the chat. I will just take that straight. Yeah. Will you have suggested M&A, that's merger and acquisition, as an option than a venture capital option? It depends. It depends, and it also depends on the level of M&A. For structured companies, I mean, you will see that they might not even be talking about acquisition if the company is not profitable. So most high growth companies are not profitable until maybe after Series A. So merger and acquisition might not come in there. Or else, if what you're talking about is, I mean, we look at the case of Paystack. I believe a lot of you know Paystack. Paystack had done their Series A. I believe they did $8 million in Series A then. And one of their investors, Stripe, then did an acquisition later, and they didn't have to do Series B or maybe even private equity. That was an M&A. So it depends on the business, and it has to be on a case-by-case basis. But largely on if it is not a strategic, and what do I mean by a strategic? A strategic is an investor who you are in same line of business. So for instance, Stripe was a strategic investor in Paystack, because Stripe likely do what Paystack is doing in Nigeria. Stripe they do that in the US. I hope that answer the caller's question. All right. Do we have any other question or any area you would like to request for more? Go ahead, please.
Yes, I want to ask this question based on what you have said so far.
All right, please.
So what is the state of private capital in Nigeria today?
All right. It's far better than where we used to be. Though I mean, the larger percentage of capital still comes from abroad, but I can mention no less than 10 private capital, either it is venture capital or private equity. There is, there is Kuramo Partners, there is Verod Capital, there is Synergy Capital, there is Uhuru Partners. So there is a lot. And the good thing is a good number of them are now getting capitalized, so a good number of them are getting capitalized nowadays. So, and one thing that is also critical is depending on your sector, there are also investors, global or foreign investors, that will want a local investor, that will want to see that you have a local investor that has already indicated that they will back you, because most of them know that they cannot be in Nigeria. They cannot fly into Nigeria every week. So having a local investor as a co-investor with them gives them some level of comfort. They see it as de-risking their investment. So I would say, as much as possible, consider local investments. And I mean, I need to add that even though I had laid those things from angel investment to seed investment to Series A, it doesn't mean that it has to be same for everybody. For instance, in our case, of course, Energy is an SDG themed company. We started with, in fact, the first outside capital I got was loan from Bank of Industry, right? But if we started today, we probably would not have been able to get the same loan, because the structure is a bit different. No? So loan from Bank of Industry, and then we got grant from DFID. In total, we got about £250,000 worth of grants in between 2015 and 2017, before we then did our Series A in 2019. Okay, we have some hands up.
Yes. I think the person that has his hand up first is Mr. Idowu Ashenuga.
Okay.
Yes, thank you very much, Mr. Femi, for all the explanation. Actually, you were almost close to answering what I really wanted to ask you about. And that's, I need you to define a financial path for a food business, which is, of course, an SDG thing, that is currently worth like $1 million and wants to scale to, let's say, looking at investment and, scalable finances that can take you to about $20 million value. So how will you define such a path for such an organization? Thank you.
Okay, great question. So $1 million, you didn't mention if that business is, so it's worth $1 million, is it already profitable?
Yeah,
If it is
it's profitable.
If it's profitable, it's not impossible to do a VC or even a private equity. So for instance, one of my investors is Norfund. Norfund invested in the owners of Kilimanjaro. You know Kilimanjaro, right? The
Yes.
Kilimanjaro food chain. Yeah, so they did a private equity investment in Kilimanjaro. And I believe that that is in Kilimanjaro now to scale. So if the business is $1 million, yeah, maybe it might still be small, but if it's already profitable, I mean, you might be able to get venture capital straight. And because it's a food business, you can also look at the private equity or venture capital arm of DFIs. So DFIs are development finance institutions. And that's the more or less the investment arm of funds of government of foreign companies. In fact, even BOI, you can also talk to BOI locally, you know, and it's something that I'm happy to make an introduction to Bank of Industry. So your North Fund is the Norwegian fund for developing countries. CDC of the UK government might also, I may be interested in such. And the local privates, I mean, I know that Verod has a few food portfolio company in their portfolio. I hope that answers your question.
Yeah, I mean, that's a good one. Thank you. I will find a way for us to keep the conversation going. Thank you.
Yeah, LinkedIn is my best bets. That's the best place to find me.
All right. Thank you very much, Mr. Femi.
You're welcome. All right. I don't know if we can take one or two more questions.
Hello, sir.
Mr. Alatunde, go ahead, please.
Yes, sir. While we are waiting for others who might be having questions, I would like to ask another question again, sir.
Go ahead, please.
In your own opinion, what sector do you think can attract private capital in Nigeria?
That's a broad question. I think there is no sector that cannot attract private capital. Of course, there might be sexier sector, if I can use that word. But what I know is investors also follow the money. You know, so investors follow the money. You will see that, of course, there is issues of fuel scarcity and all of that's happening. We don't have electric vehicles yet in Nigeria. So that might be sounding as, oh, this man is thinking too high or too big. Energy, when we got investment into energy is because it's a no-brainer that energy is critical. Food, we have, more than 200 million people, right? More than 200 million people will always eat. So our friend that has $1 million capitalized business is already in a good place. It can only be up if it is well structured and managed well. You know, the population it counts for us for people to be able to look at what can you sell to people at scale. I mean, see Indomie noodles, minimal chin chin, or what is that chin chin called? I mean, I know someone that took that chin chin to the US, and the children took it to school, and some of the children, the student friends were asking, oh, where did you get this and all of that, and it's food, you know. So there are a lot of sectors really, and that's why when you see some of the advanced or developed economy, you see that it's not just one sector. But back to your question, in Nigeria, food we always sell, energy we always sell. Any area or any sector of Nigeria where there is problem and people are talking about it's a problem. Any innovation that can solve that problem at scale, money will follow it.
Thank you, sir. I can see Mrs. Alao asking about your name. The name of our speaker is Femi Adeyemo. And like I said, you can contact him or connect him on LinkedIn. He said that's the best option for you to connect him. Yes, I can see that Mr. Ian, is having his hand up. Can we hear you, sir?
All right, thank you very
Okay,
much
that
once again.
the last one. All right.
Yeah, thank you very much. Now, the topic for this session actually was on leveraging private capital to accelerate commercialization, as in private capital. But I heard you mention Bank of Industry, and I'm wondering how that falls under the private. Now, if it is relevant, in this conversation, I don't know if your what your advice is on the peculiar experience that an average entrepreneur has with banks. The fact that they are the most unfriendly, no matter how hard you try. I mean, it's amazing how a bank calls and asks you to bring a landed property as collateral. I mean, it's just. So
Yeah.
you know where I'm going to, right? Yeah.
Yeah,
All
I
right.
know where you're going to, and yeah, I mean it's just unfortunate. But so the title, private capital, you know, there can be private capital and there can be public. And then public is when you really go to the public market, which is your New York Stock Exchange, your raising bond, or Nigerian Stock Exchange, or you're raising bond. But indeed, I feel your pain, and I can tell you that even where I sit, I can't say that we already have a good hand on banks. So why I mentioned Bank of Industry is, to some extent, and I won't say to, you know, I did mention that when we got into Bank of Industry, I mean, things were a bit easier for entrepreneurs then. That's not saying that they are still not supporting entrepreneurs, but I hear you on collateral and all of that. And again, feedback that I've heard is because maybe in a few times they've gotten their hands dirty. People had thought that maybe it's also national cake. People have taken loans that they did not, they didn't pay back. You know, so indeed, it's largely against private capital, but I can tell you that even with the private capital, you might not be able to run away from banks. And I will give you an instance. So we're bringing in some debt in US dollar. The first that we will do, I have never signed any debt in US dollar. But we are at a position where we got a good rate, but I don't want dollars in my balance sheet because I don't know what will happen tomorrow. So there is a way where you can hedge it and you can get a bank to give you Naira instead of you taking that risk of the dollar. So in that case, you still need to work with a bank. And I don't want to go through even the funny things that, even at that, the fact that I am the one that sourced the money, they're just in the middle to convert. They're still telling us interesting things, you know. So, but I can tell you that as much as possible, it's a case of you just need to find a way to work with banks, because if you run away from them, they're still running after you. I think I will want us to stop there. So as Rome Business School mentioned, interestingly, I am an adjunct faculty member at the Rome Business School. So I teach a few courses. The executive MBA students, I teach them a few courses. The entrepreneurship and innovation executive master, so I teach them a few courses. It's great having you guys. Look me up on LinkedIn, and then if you want direct advice outside class. Mr. Moderator, please go ahead.
Yeah, thank you so much, sir. You said we are stopping at this point. I thought you would take us a little longer because I still have a few questions to ask. And
wow.
Whether you can still permit me to just ask one of the questions.
Okay, I meant to have a 4 p.m., but go ahead. Let me try to.
The 4 p.m. is just for you to. We still have an opportunity for question and answer after the 4 p.m., sir. I don't know if you have the time.
All right, go ahead. Go ahead.
Okay, sir. Thank you, sir. Yes, I want to ask, how supportive are the government policies in pursuit of commercialization through private capital in Nigeria?
Government policies. All right, so that's a tough one. I think when such question comes, I always try to just flip it and advise the government that they should do better, and the government should stop playing to the gallery. right? There is a lot more that the government can do. The currency alone is one that if we can spend 30 minutes on that, that's not supportive. That's not entrepreneurial friendly. The fact that you have two exchange rates, 430, and I don't know what the black market is today, it's not entrepreneurial friendly, so, but I mean, my advice will be for entrepreneurs. I mean, for a lot of developing countries, regulation catch up with innovation most times. And I would just say, as much as possible, just do your thing. So on a larger scale, I mean, if I narrow it to my industry, of course, there are a few things that government have done well, or have done okay, that we hope that they can do a few tweaks here and there. But on a broader scale, there's a lot, much more that the government needs to do. Hope that answers your question.
Yes, sir. Thank you so much. I don't know, because I wouldn't want to bother you so much.
Go ahead.
Okay, okay, thank you so much, sir. And last but not the least, I want to know, or I would like you to further educate us on the benefits of this commercialization in the Nigerian economy.
Say that again, the benefit of what?
Of commercialization in Nigerian economy.
There is no economy without commercialization. Yes. Right? So it is the ability to be able to commercialize ideas at scale, to be able to commercialize, to scale businesses. So every developed country today, it is because they've been able to commercialize ideas and businesses across different sectors. So commercialization, and when you scale your commercialization, you bring in industrialization. So it's critical, because without commercializing, there is no industrializing. Because you need to be able to say, okay, you have a product that you can sell. I mean, if you go build a factory, I mean, Dangote will not invest that much money if there has not been some sort of commercialization at the group level, and they've been able to see that they can sell before spending that, billions of dollars in that industrialization efforts. So indeed, commercialization is the heart of any economy.
Thank you, sir. We're very grateful, sir. And I would like to say, on behalf of every one of us in the house, we are very grateful for your time and your effort. We know you have sown great seed in our lives, and we believe that it will definitely bring good results. So we are grateful. Thank you. Remain blessed, sir.
Pleasure. Have a good evening, everyone. All the best.
Thank you, sir. Yep.
Yes. Hello. Hello.
We are here.
Hello. No.
Can you hear me?
No attendance.
Hello.
Hello. No attendance.
Let's call Mr. Christopher Lawa to give us a rundown of the school of the Rome Business School programs. And if there will be any need for attendance, kindly assist us as well. Mr. Christopher, you are welcome. Hello, Mr. Christopher.
All right, good afternoon, everybody. Can you hear me?
Yes, we can hear you.
All right, thank you so much for the wonderful session, Mr. Femi. We really appreciate it. Really appreciate it. Thank you for taking us through. Thank you for taking us through that wonderful session. Okay.
I've been trying to reach you for some time now. Seems to be good for informative sessions.
Hello, can you hear me, please?
We can hear you. Speak on.
All right. So thank you so much for the session. Okay, so Rome Business School, it's a managerial institute. And we have different master's program, which we do that enable us the chance to equip professionals with the skill sets needed to drive and take on the challenges of 21st century business. And the masters in entrepreneurship and innovation is one of those master's programs that give you insights into different ways to also raise capital, different ways to support your business, and of course, put the right system and structures in place to enable you drive your business, okay? And we also have other programs that are very flexible, okay, because classes are 2 weekends every month for the duration of the program, Saturdays and Sundays. That gives you busy professionals the time to make out and of course, develop yourself and take your business and organization to the next level. Okay, and we also have different structure, okay, that enable you to get the best out of the program. The certifications are internationally recognized. You have opportunity for also international exposure through our study tour and boot camps. And of course, currently with the Business Leadership Development Program, currently ongoing to Raising Global Business Leader, we ensure that you are equipped all round, you understand, to take on the challenges of the 21st century business place. Okay, and currently we're also trying to round off the application. Seats are filling up fast. And of course, we still have some special scholarship consideration for those interested in our various master's program. You can reach out to your advisor to give you further insight or send a mail to info@romebusinessschool.ng for more insight. An advisor will reach out to you and of course, walk you through the program and take all of your questions, okay? So at the end of the day, within the 1-year duration you spend in Rome Business School, you would have been fully equipped with all of the skill sets you need to drive change within the 21st century business place. We can't wait to have you on board and kickstart your journey to greater excellence. For further inquiries, like I said, you can send a mail to info@romebusinessschool.ng. We'll be delighted to help you and walk you through this exciting journey of yours. Thank you so much for the audience. Also, thank you, the moderator, for this wonderful insights. So the attendance has also been raised, so you can sign so that you are captured as part of the Business Leadership Development Program. Thank you.
Thank you, Mr. Christopher. Thank you so much. Now we'll be calling on Olufunke Alaba to give us a closing remark. Hello? Hello? Is Olufunke Alaba hearing us?
Hello.
Oh, you're welcome.
Hi, good evening, everyone. Good evening. And thank you for joining us on this section. Thank you so much, Mr. Femi Adeyemo. Thank you so much for joining us in this section. It has been really insightful. We're able to learn a lot into investment. Thank you so much. And I also want to say a very big thank you to the moderator who has moderated this section. And also another big thank you to those who participated from the beginning to the end of the section. Thank you so much for this wonderful time. And also want to say a very big thank you to Mr. Femi Adeyemo for this insight into investment. I believe that as we have learned from this section today, we are going to be able to take it into action and also play, and it should also play a vital role in our private life. So as we move on, expect that we also reach out to Mr. Femi for more insight. You can reach out to him on LinkedIn so they can provide you more insight into this section, and also find a way to network on, also take advantage of these information that you've heard from this section. Thank you so much for this for your time, and do have a wonderful time.
Hello?
Yes. How was it? You know what I mean?
My name is Dr. Humphrey Akanazo.
My name is Iyasele Philomena Obey.
Hello, my name is Tomilola.
So my name is Eramasele Agwegale.
Hi, my name is Nancy Aworomokuchi.
My name is Davidson Ediego.
I am the country director of Rome Business School, Nigeria.
And I work with Nigerian bottling company Coca-Cola. I'm a sales and distributor manager.
I'm a business consultant and entrepreneur. I'm currently a business and territory manager for West and Central Africa for a company called Fisher and Paykel Healthcare.
I currently work with Asa Finance. I'm the account manager.
I am the head of admissions here at Rome Business School, Nigeria.
I work for Axela Limited as a sales and marketing manager covering Southwest region of the country.
Rome Business School is an international business school that has campuses in different parts of the world. So we train today's managers for tomorrow by being inclusive and innovative, acting ethically for a better world. And that's why the motto is better managers for a better world.
Our target market at Rome Business School are high-level professionals who are self-aware and are interested in progressing their career. The school has designed several master's programs in different areas of specialization for our students.
So after attending Rome Business School, doing my master's in business administration, getting back to the office, I noticed I was able to handle situations more better. And currently, I'm getting a promotion. I even requested for a change in product management because I was able to do some of those programs here in Rome Business School, and that actually gave me a heads up not to be scared to take up a course that probably I've never done before.
One of the key aspects of the program with Rome Business School was the networking part, in which I was in a very close-knit and niche group of people, fantastic individuals. They had various backgrounds from the banking industry, from, of course, advertisement industry, also just pure marketing industry, also medical device industry, where I was able to network with a lot of individuals.
That really made me a better person. How? When it comes to actually driving home my cause, when it comes to meeting my target, thinking outside the box and become more analytical when it comes to achieving goals.
And I can boldly say that coming to Rome Business School from day one, they were able to put me through, make me to be a better person. And I can tell people for a fact that today I'm far better than where I was coming from.
My advice to you, my fellow students out there, is Rome Business School is a flexible school.
What I advise people to come when you come into Rome Business School is to look at it and say, I'm coming here to learn. I'm coming here to improve myself. I want to be better than the person that was yesterday. And like the motto says itself, becoming better manager.
I advise anyone who wants to do their master's program to check out Rome Business School because you're not just getting it online. There is online and there's also physical classes.
Rome Business School is a community of people, and we treat ourselves as one.